Good evening. This is June 30th. I wanted to do a recap of what's going on in the markets, my levels, and hope this helps with some of you guys who are new to market profile. And I like to do these videos just because it kind of like um, explains certain things that I look at with the market, and it definitely will uh, help you guys look at markets maybe in a different way, and just to maybe get a bit more custom with the profile. I personally trade ES and NQ. Lately, I've been trading much more the NQ. It's just been a bit more volatile and has given better swings, and I think that the volatility is actually to my advantage, and the entries are a bit easier sometimes with that. And also I like to play the micros, so the micro NQ gives good risk reward, and also great entries when it comes to scaling in, especially if you have levels that you're looking at. So I'm gonna basically um, demonstrate what I look at on the market profile here, mostly on ES today, because a lot of you guys are looking at the ES, and I think uh, this analysis could be a bit easier with ES here with the levels. First of all, when it comes to the market profile, um, some guys have been telling me like, how do you combine market profile and volume profile? Basically, just to make sure we're all in the we're all understanding all this. Market profile is just 30-minute TPOs, time price opportunities. So all these letters are representing a 30-minute time frame. So this is June 30th here, as you can see. This is the overnight. That's a bit background is gray, and this is the regular session. A period is here, B, C, D, as you can see, and we've got the M period. In market profile, this level here is the TPOC. I have them colored blue, and for some reason I didn't highlight this one, but I will do that now. So basically, I highlight at least 3 to 4, maybe the last week's TPOCs for each day, because I firmly believe that the market likes to kind of retest these levels. They're kind of like magnets, and the market wants to rotate and either bounce off of it, especially when the TPOC is, I'd say, 8, 9, 10 wide, which means that the market TPOC, first of all, is time price opportunity, time point of control, sorry. So the TPOC is the fairest price where the market spent the most time. So from the first 30 minutes to the last 30 minutes, which is M period here, the market's average fairest price is approximately here. So this is just depending on according to time. And if you look at the volume profile here, the volume profile, this yellow line, sorry, at the bottom is the open. So I always highlight the open in yellow. The volume profile here gives us where we had high volume nodes. So basically we had a lot of volume that was created here, which is very obvious because we had the time point of control, which is again the fairest price here. The way I use the TPOC is not about a bias, or it's not about I want to buy here or I want to sell here. I want to see if the market is respecting the TPOC and is going rotating around it. And I also like to see when the TPOC basically shifts. So I'll give you an example here. The way I could explain this to you is by just drawing a line, okay? So A, B, and C. If you were to do, let's say, um, the TPOC of the first three time frames, let's say it was around here, right? So basically that's like the middle of this whole range, right? So that means that the TPOC initially in the day was around here. And then as the day progressed, the TPOC shifted higher. This is a signal that the market is accepting more time towards the higher prices, which is also a significant information when you're looking at market generated information, because you want to know if we're spending more time at higher prices, this means that more and more participants are willing to buy higher prices. So that's already a little clue. And the fact that, you know, the market compared to the previous day, which is again, the previous day is here. Okay, so that's the 29th. This is the overnight, and this is the 30th, um, Tuesday, the 30th of June. So basically, if you look at just the overnight, I have this red area here highlighted just because I knew that coming from the previous day, this single print, so a single print is when we make a new high on a 30-minute candle, and the single print was never refilled. It was not filled here. It wasn't filled in the regular trading hours, but in the overnight, what happened is we came back into that area, spent time below, and the market bounced off the teapot from Monday. So that's the time point of control, and the market bounced off of that. So the way you can see this in the overnight is if we come here and we get to see buyers coming in on the tape, which again on the tape it's because I use Jigsaw. It's on my background here. I can maybe get to that after. So the tape basically gives us a way of, okay, if we get here and if I start seeing aggressive buyers who are initiating buying, this means that they want to buy at these prices, right? That's pretty much how you should understand the market profile. So TPOC, we got to that, and um, the overnight session is generally, uh, it's I don't really look at the overnight like, okay, the overnight is short, or overly short, or overly long. It's basically a continuation in how is it respecting the RTH levels. Just before I resume, I just want to make sure I've got this disclaimer, my contact information here, and don't hesitate to contact me, especially through Twitter. I I have a lot of fun doing these webinars and seminars, and also coaching privately with several traders. Don't hesitate to contact me. It's a pleasure and also a passion looking at markets and understanding order flow and also market profile nuances. If we resume with the market profile here on the ES, so ES once again, the S&P 500 index. If you look at today's auction, the first clue that told me that we were most likely going to go up is one little detail. Um, okay, so value area shift is something that I always look at, but I always want confirmation on the next day, and to really have a long bias, we need to understand the context of the last couple of days. So this is 26th of June, which was Friday, right? The 26th of June is Friday, yeah. And this is Monday, and this is the 30th, Tuesday here. The 26th of June, it was a day where, if you look at, let's just rewind a bit here, quickly. The 25th, the market compared to the 24th, if you look at value, it stayed pretty much the same. Then overnight, we gapped up, all right? Sorry, we were trading in the range of the RTH of the regular trading session. However, in the next day, all we did is we basically got into the overnight range and flushed down. So this area here, this single print, kind of gave us a hint that the market wanted to go lower by not respecting it. Okay, so this was a very important detail here. Okay, and the fact that the market, as soon as it rejected this area, created another single print here, which went all the way to the 29th, and it actually became the same supply area for the high. Okay, and the reason why this area was very important is, for me, as soon as the market would bounce off these two single prints from the 29th and also from the 26th, I said to myself, this is an area if shorts want to basically continue keeping uh, keeping the pressure to the downside. So basically here in the overnight, if you guys could see here, the market has rebounded off exactly that single print that we had here on actually today, basically in the RTH, in the regular trading hour. So basically I was looking at this M period spike. the the way this works is that the market profile, if you look at the theory with Jim Dalton and all the other market profile theorists, they always emphasize how the spike at the end of the day is really important. Don't really look, not really, I don't really understand or really look into what the whole process is of this M period, but some call it an inventory readjustment, whatever happens at the end of the day. This spike is really important because if you want to know if the market in the overnight is trading in this spike, if it's respecting the edges of the extremes of these two of the spike here. Mostly it's that M period. It's the same thing when it comes to a spike at the end of the day. um, I don't have an example here that's ready, but maybe we could look at a day where we know the market closed or had a spike in the M period. I don't think we had one recently, so we might have to look into it here. So it would basically be a day where, this is a day here, June 19th. So the market on June 19th, so I'm just going to scroll around here with the setting the scaling. Market, this was a nice day to trade. The volatility was great and very clear signals when it came to uh, nuances on the market profile. This single print that day just basically gave us a clue that you should just basically look into selling into these low volume nodes that day. And also the fact that M period, the last period basically, did come out with a spike here. Yeah, that's the spike here. So the first thing you want to know in the overnight is, are we trading in this spike, right? So basically the market opened much lower and rotated towards that area, and especially when we started getting acceptance back in that spike and we had this single print in the overnight, this was a clue that the best thing was to target this, um, the spike end here, the spike high, the other extreme of the spike. Also, that came to the same teapot here. As you can see, the teapot was right here. So that was a very prominent teapot here, especially having at least 8 rotations coming back into this fairest price of that day. Um, I know I was discussing value just before I got interrupted, but here on value, if you come to today's structure, the last couple of days here, we were looking at basically here how the auction had basically given, several days. This is the overnight, so 2 days in a row where value was unchanged. The next day in the overnight, we went higher. We had closed at the highs here, and the first thing to really look into for me that day was, how is the market compared to this zone? So the way I saw this was, I was expecting the market to chop around these two single prints, and if sellers wanted to take control, they basically needed um, market to go under this single print and maybe not even look to trade above these two single prints, because this is where sellers took control that day, and you want to see if sellers are able to still maintain control even though we had a value that was unchanged. The fact that we were trading in that same range and we not really able to trade above this zone kind of hinted that maybe this whole, the fact that the market closed in on the highs this day was not really a strong close. I think the NQ had a pretty much similar structure that day. So that was a clue that, this overnight trade looked kind of suspicious, and also the fact that when the day started, we just the market opened here, and man, it was really huge selling that day. Um, so every time we got into um, basically we went higher and higher. Every time the market would do a rotation high, the low volume nodes were basically always being respected. I mean, that's a clue that the market has, you know, very mechanical trading, and you should just look into selling any rip, any basically any rotation to up. Um, that day, the market basically traded down. So we've got a day where we had value that was overlapping lower, right? Compared to these 2 days. I think a lot of people, myself, I was pretty bearish that day. So that's why, how the market closes is important, but you want to see follow through and you want to see confirmation the next day. So I had tweeted this and I had said that basically I was expecting the market to trade below this range, which it opened here, went higher, and never able to take out that day's low. That was already a signal that, maybe sellers are exhausted and we're going to have to rotate higher. Just the fact that this was something to really look into in the overnight. Also, when I saw the fact that we had at least 4 or 5 touches into that previous day's close and not able to accelerate to the downside. You want sellers to really take control from here and take the market lower, which did not happen. So that was a good way of kind of like reassessing your bias, because my bias was bearish and a lot of traders on Twitter were bearish and this was a bearish close and all that. And the other way I look at it is when the market basically um, gives you an area where the sellers at the end of the day, if you look at it this way, they were shut off at this zone, right? This zone is where sellers need to really take control below this, and sellers were not able to close or not able to trade below it, right? Because we had 1, 2, 3 auctions where we had 3 time frames going down here with a single print that occurred every time, and every time the market would rotate back up, even if it's towards the end of the day. So that's a little signal to always have that spot where, okay, I need sellers to be very aggressive below this area. That's how I keep a bias. And this area, I mean, the market was only able to, what is it, approximately, let's say, sorry, what is it, 29.94 went down to 29.82, right? That's like a 10-point range, and it rejected this low from that day, and we were not able to trade much below it. So that's already a signal where it rejected approximately 8 to 10 points, and that's already a signal where if you're not able to get back into a 8 to 10 point uh, rejection here, it's just that sellers are really getting trapped or they're being absorbed by the buyers, right? The absorption was not something you can really clearly see when it comes to the delta here. I was looking at it that day, and didn't really give a good signal or any kind of, it didn't really give us a good signal there. But anyway, that area is very important when it came to sellers being shut off at that low, and you want them to be aggressive below this, right? You want new bears, new sellers to initiate. You want new sellers to come into the market, which is not what happened. And leaving this single print and rotating back into that same area again. You see, like, yes, sellers did come back in with this rotation. I mean, sellers did come back. I mean, come back in means they went all the way up, and they still had good chances to come. And the way I was looking at it is every time we would get into like an area where during the day, right here, right, sellers took control, right? So I was like, okay, if you want it to be a seller, you want to sell the market in this area, this low volume node. And then if you want to be a seller, you want to sell the market into this low volume node. Always comparing basically the same regular session. That's a clue where, okay, sellers are appearing at areas where I want them to be, you know. And I always give it like, if this is a zone, this is a low volume node, and you know, if the market is giving me a rotation above it, I'm just gonna have to play around with this here 2 seconds. If the market is giving me a way to, okay, we're at 30.14. What was the highest? We went to like 30.21. That's like a 5-6 point rejection from this area, and we're coming back in. Just means that look to short in this area, okay? And I would I would have targeted back either into this area or even lower. If you short here and sellers are not and some buyers are not able to basically hold this level again, I was gonna say, okay, now the sellers got back in, and this is still sellers market. You know, again, that same level held. How important context is in these cases. Same level held like several times. Um, I had a trader telling me, well, you know, that's where I think the best area was to go long and to, you know, keep a long bias. True, 2996, 2997 could have been the area to go long. And the thing is, don't really rely on what happens in the overnight, because what happened after in the RTH is market opened here and basically shifted lower. So it did come back to retest that. And what happened? We had one, two, clearly third rejection from this area, that 29.97. Yes, the market will go and take stops or name it here. I mean, it could be stops, it could be, you know, people initiating selling again into this area, and whatever it is. The whole point is this area got rejected several times between this day, the overnight, and that day. And again, the clue here was, is this day basically a day where buyers have stepped in? The reason why I'm saying that is we had value here and we had value that shifted higher. So if this day with this single print, as soon as this single print occurred, for me that was the area to go long. That was the area to keep the long bias. Okay, that's why I'm just going to put this in green, because for me, it's just my coloring. I just always like to have them there, and I can quickly visually see it. And I believe I had posted this, but I don't think I have notes here. I said to myself, I want buyers to maintain the market above this area. Okay. And then on the 29th here on Monday, I loved the fact that the market came back and gave us another entry. Sellers got shut off here on the 30.27. This level here. Uh, why is this level important for me? If sellers wanted to maintain control, they needed to get the price lower and close maybe lower than this area. And then I would have thought that the overnight we would chop in these two zones and then let the market digest what happened here, because value shifted higher, so it needs to digest, are these guys new buyers in this market? And the fact that this day we had another M period, so I'm just going to highlight it like this, that gave us a probe to the upside. Market closed higher. Once again, even if the market closed higher, for me it's not about market close high, it's bullish. Look at the overnight. We have very very important volatility in the overnight, and you know, if you have that bias where, oh, we close at the highs, it's a buyer's market, just buy. No, market opens, tests this single print from the previous day, so mechanical. It comes back to these levels, and these levels get basically respected almost to the tick. Beautiful, very very mechanical, no worries. You could have bought that there. Okay, the thing is, if you bought 30.44 and you got a rotation to 30.59, which is over 10 points here, I mean, at some point you need to at least have a way of, you know, taking some profits off and, you know, monitoring for continuation. Because if we're getting a, you know, a decent rotation here, which is like a lot of in the overnight, that's almost like 10 to 15, maybe, what is that? 4, 8, 10, 12, like 12 rotations at higher prices. and then we get a liquidation here. That is the kind of overnight sessions that could occur. If you get a liquidation like that, I'm not saying I would have sold, because I don't think I didn't really trade this overnight, but I saw how the market came back, rotated again in this single print, and the fact that, I was seeing, like, I woke up a bit early that day, and I was able to see it in, in the tape, how the market had basically give given good opportunities to sell and to buy, and the rotations were pretty nice. If you were a buyer, you wanted to come back into this POC. If you were a seller, you wanted to at least get aggressive below this single print, which did hold several times, and your target would have been the POC of the regular trading session. The fact that the regular trading sessions time point of control held twice, to me it was like, okay, this is not really strong sellers. I think this was not just a short squeeze, it was really decent buying, because the real buying and selling only will be confirmed once you are able to keep the market above certain levels, right? And this level here for me was this single print here, and the fact that the market never rotated back in this M periods ranges, the extreme here and the extreme here, so the market never came back here, decently gives us a clue that in the overnight it was a good strategy to look to buy in this area, targeting always these, areas, because you could have bought here and targeted this, so it would have been at least a 10 point range here, right? And uh, going forward, today's open was in previous day's range, below this single print, but never got extension back to the time point of control. In the NASDAQ, just because we're talking about point of control and the bias of the day, the NASDAQ was very nice. I have to show you guys this here. The NASDAQ, that's why correlation between markets, just to see what the NASDAQ's doing, what Russell's doing, is really important. NASDAQ came back to its uh, time point of control, okay? This single print held, and it just shot back up. For me, in the NASDAQ, it was very clear we needed this level for buyers to take control. So that was the same level where the overnight held, and we had flushed down. If that overnight session, the sellers were, in control, you don't want buyers to be aggressive above this, and that 99.95, I even tweeted this level, gave a great entry, and I was able to make very decent trades on NQ today. So for the ES, the whole day session was really very clear once we rejected these single prints, and when we went above the overnight session and we created a single print here. So that single print is in my little white area here. The single print was filled later on, but that's not a problem. On, on the C period, the third TPO, if you create a single print with an initial balance breakout and we're never really able to come back and trade into this, this is basically a buyer's market and you really want to look to buy. Yes, we got an H period here, which is in the afternoon. Some profiles are going to call that the afternoon pullback. I give it to them. The way I look at that is I want to see if this single print, which is in blue now, in green, sellers got shut off there twice for me. If sellers wanted to keep this, wanted to take control and basically keep control, they need the market below this area. 30.59. For me, sellers need to get aggressive below this, because that was their chance right there, take control. The single print was filled, and they should have taken the control here, and also kind of coincides with the edge of this high volume node, which is a low volume node here. That's an important inflection point for me. So this day was, so the 30th of June was pretty clear. Good auctions towards the highs. And I had tweeted that I was basically looking for targets in NQ. NQ gave me better entries and better targets just because the NQ, the Nasdaq, uh, came back into that 10,059, the FOMC 10th of June, when the Federal Reserve had announced its interest rate policy and everything. And that was a day where the market had sold off, and the same level became very important. The fact that the market was able to close above it and rotated above it gave us some good entries. Sellers got shut off at that level here, where the market came back, and I think it was news driven too. I'm not too sure what the news was, but uh, when the news occurs and occurs into a level where your bias is tested, that's a very good spot to kind of like lean on if you're long biased here, which I was. And this teapot from the previous day again went higher, and we were able to rotate above that several times, just meaning that it was an inflection point from a fundamental day where the FOMC came out with some information there. Those kind of days generally give you good areas to lean on, and being able to create a time point of control, especially on the ES, which came exactly on the spot where the FOMC areas were closing above it, and that's pretty bullish. Now, for the for the overnight, what occurs is, again, since we had this M period spike, we're right in the middle of a range where the only area I would lean on to buy was this 307850, which is a single print and the low volume node that came in at M period here. So that single print got tested here, and we're basically trading above it. We're trading volume above it, and it seems like that 3078 will be the temporary support for the bulls. Okay, the bull case is still on and still valid for me, as long as we're not getting aggressive below this 3059, and if we're getting decent rotations off this time point of control where the market spent approximately, it's the fairest price of the 30th of June, where market spent at least 7-8 rotations there. So I'm expecting the market basically to rotate between the M period extremes. That's how I look at the market, especially if we've got a probe here on in the M period, and it's kind of like expectations, right? You can't expect the market to just, oh well, it's just going to continue going up. Look, this is the futures. The futures tend to overshoot, or over go below a level 2, 4, 8 points, especially in ES, and NQ could be 8, 16, 20, 30 points sometimes. You want to see the level of participation and how the auction occurred when it came with the tape, especially if the tape is super bearish or super long. It took me some time to get over this, but I was able to basically you know, um, learn how to read the tape with the market profile with a Jigsaw here. So Jigsaw kind of gave me a new way of looking into the markets, and it's a decent platform where you have the depth of market. You can go and see my other videos here. This is the micros ES and also NQ, and you have the tape where you see who's temporarily in control, where the blocks were coming in. If you look at the blocks, I don't think we had any blocks in the overnight here, unless my jigsaw is not giving me the right connections here. So as you can see here, the tape is slightly bearish now. Nothing coming out in the blocks. This is my medium blocks filter for ES. As you can see, the market did take a nice little shift down. It basically went all the way back down here. It's rotating again. So that was a very quick way of visually seeing how the tape works here. As you can see, we're seeing much more aggressivity on on the seller side here, especially on ES, it was very clear, but NQ basically has some the blue here. I have them in coloring, so the blue is just they're sweeping the book here. We had some sweeps on NQ. I use the tape with the regular uh, contract, the NQ and the ES. And if I'm going to trade the micros, so the micros, 10 contracts of the micros is equivalent to one regular contract, the one E-mini contract. So if you do 1 point, just to demonstrate, if you do 1 point, if I was to buy here, let's say, let's say I was to buy here, if you're going to buy here and you make 1 point, which is, sorry, one tick is one level up. One tick in the micros is like $1.25. You make $1.25, but 1 point will be around $5. On the NQ, you could rotate 5, 10, 15 points pretty easily, especially if you get good entries. So if you had an entry here in ES at 30.78 and you were able to ride that to 30.88, that's 10 points. On one contract in the micros, you would do 10 times 5, $50. $50 US dollars. And if you're able to scale in 2, 3, 4, 5 contracts, that's 5 times, um, 10 points, which is 50, 50 times 5, 250 US. Uh, I generally like to keep my micros to 10, 15 contracts. If I have a bias, I'll buy some here and then I might add some here, with the micros. But I mean, again, I kind of like leverage that with the tape. As you can see now, like ES has some buying coming in. With Jigsaw, you're able to kind of erase the most recent footprint. So you're able to see the footprint that's the inside bid here, the inside of what's going on. This is a footprint that you can keep. So if I just click on this one here, it'll just update and erase the most recent trades. And I can keep this for, let's say, a level I was looking at, and you have the delta here. So you see the delta is negative on NQ, also on ES. So we've got some decent selling occurring here, and we've got, the sellers are present, but in the overnight it's a bit trickier with the tape and the volume, because it's not like the regular trading session. But what I suggest to sorry, most traders is that you need to give yourself 1 to 3 months at least to really, you know, really digest the market profile, digest tape. If you're going to look into trading with dome and tape, 1 to 3 months is just to understand what you're looking at, and then to really find the nuances and all that. I I'm coming back from a technical analyst background, where we've all traded with indicators, we've all looked into markets with candlesticks and all that. But if you don't get the context and you're not able to know where buyers should initiate, sellers should initiate. If sellers show up at levels that I'm expecting them to, and I'm getting confirmation on the tape with that, that's where you have an edge in trading. Market profile basically just structures the way the day went on and how the day had traded. You know that the most participation occurred at this level, 3068, approximately 3069. You know that the most volume was in this area as well. You want to see, if you're a buyer, are buyers able to basically, oh, this low volume node, we're holding it. This low volume node, we're holding it. We're going up with lower participation or lower volume at these areas, and you want to basically ride those areas to areas where there was much more participation. And more you get participation, the participation occurs with more participants coming in, more buying coming in as we're going higher, and then more selling occurring at, the sellers are respecting these low volume nodes are being respected, and as we're going lower, sellers are initiating to sell, at these low volume nodes. These are the little nuances that you're going to see. That's why I combine the market profile with the volume profile, or else market profile, a lot of profiles are just saying, oh, well, initial balance broke and we rotated. This is where TPOC was. But you need to get this information to give you uh, good areas to execute. And the execution comes from a trade idea that you see on the market profile, which is giving you a zone to look at. And then my execution comes with understanding what's going on in the tape. Sellers are very active here. I could see that sellers are active on the power meter. NQ is more to the sell side. Now it's getting a bit more balanced. ES is more to the sell side. Let me clear the, you know, let me clear the trades just to have a better view. I just basically see the market here still rotating between this high that we created here in the overnight, and we're respecting this 3078.50. If sellers become more aggressive below this, then I'm going to say, okay, we're probably going to rotate, first of all, to the extreme low of this M period. And then that is going to be an area to really, really monitor, because if sellers take control, my next target is the time point of control of the day. And honestly, if you see sellers really going through these levels with force, with like really good selling, this could be okay. Well, this whole day where we had buyers in control, where value did go higher, was this just basically short selling or short covering? Sorry. This is the kind of stuff that you want to answer with these nuances. And I wouldn't really become aggressive to the downside. I'm not saying you can't scalp, you can't, sell a bit here and buy back and sell any rotation. Me, as long as this area is respected and buyers are still holding above, this market is still holding above this on a 30-minute basis, once or twice, I'd say buyers are still in control. And this was just basically an overnight inventory correction, if you want to call it that. So I'm going to basically leave this on for maybe 5-10 minutes, just for you guys to, because I've had some requests from several traders. They wanted to see how they could maybe adjust and maybe understand how Jigsaw could help them in their trading. I'm just going to leave it on for 5 minutes. This way we're able to basically, you know, have a little time for some of you traders who want to look at how they could maybe incorporate this. So we're June 30th. It's 9:27 Eastern here. I'm gonna leave this on for 5-10 minutes, and I'll come back with some kind of a summary to basically close this up. I'm trying to keep these videos to approximately, let's say, I don't know, an hour max. So basically, with the market profile, I kind of believe that you need to adjust it to your way of understanding what the context is. And yes, the theory is great, but I might not have the same levels of other traders or whatever. But the way I look at it is, um, whatever market you're looking at, you know that the market traded the most amount of time in this area, and sellers had a decent chance to take control below this area, which they missed. So that's why I call it sellers got shut off in this area. For me, it's not a seller's market unless we're trading aggressively to the sell side below this area, below this 3059. That's kind of like my bias, where I know that buyers should come back and kind of initiate buying at these levels. Another way of looking at that is 3059, great. On the tape, on 3059, which is much lower, am I able to see buyers showing up with decent volume? In the bid ask ladder here, you're able to, with rhythmic data, you're able to see like the highest bids. As you can see, there are liquidity providers on micros and also on um, NASDAQ here, where in the overnight you might not see it, but you see 1030, 10,131, 207. There's 207 people, traders, who are willing to initiate and willing to buy at this level. I kind of jot those down because I tend to look at the bias on a intraday scalp. Want to see if these guys are really big traders or real traders who want to really initiate at these levels. um, Not going to go into much detail with the dome here, but I generally reset. Now my dome is not reset, but I kind of like, if I'm looking at a level where I could see that this is the volume point of control of the day, of the session right now in the overnight. um, um, we're trading below it. Our sellers, since that's, again, this is NQ, so our sellers getting aggressive below that. I want to see. And if I'm scalping, I like to look at these high volume nodes here, and kind of like play them. I'm gonna take note here. What is that? 10,133. So I'm just gonna put big buyer there. I want to see what occurs in this area. If sellers are able to take control below this, I kind of understand that this is an inflection point for me, and it could help when you're scalping, in your trading. So that's a totally different aspect of my trading. Again, this kind of took me time. I've been investing in trading since 2006 now, and my whole trading in stocks and in the futures kind of really came to a new level when I got into market profile and volume profile. When I combined them, and I was able to come up with a way of analyzing the markets that's maybe not the exact way everyone's going to look at it, but I know the theory of the market profile. I know how Jim Dalton trades, what he looks for, and I've included some stuff from him. I've adjusted some stuff. I've noticed that maybe the last couple of years the volatility in the market has picked up, and with volatility picking up and liquidity issues and all that, some nuances of the market profile might not be exactly what I want, and my trading style might differ a bit compared to other market profilers or profile analysis. And combining market profile and volume profile is, in my opinion, the best way to really have a better understanding of market structure. um, I'm getting to a point where I'm trying to resume the questions I've been getting from other traders, so I really want to make sure that I'm able to go over certain things. I'm just going to bring up the NQ's profile quickly. NQ is a market that loves to retest the time point of control. So uh, I always have the time point of control the last 3 to 4 days, especially in the NQ, and this kind of gives me a good validation of areas where buyers should initiate, and I take them down. I have these set up with uh, my CRR charts here. So I have various videos where, you know, I've explained CRR charts, I've explained Jigsaw, the dome, what I look for in the markets, what basically is my methodology and my understanding of the markets. Uh, it could vary from other traders that you guys follow, or other traders, whatever they say, or whatever the way they trade. It could vary. You know, no one's got the exact science in trading again, but I think the context is something that, you know, doesn't really change a lot. You know, this single print here for me is important. If sellers are able to, you know, basically trade aggressively below this, my target is a TPOC, you know, because this, if they get aggressive here, I'm pretty sure, especially this is NQ, I'm pretty sure they're gonna go and blow through this zone, you know, this even if it's M periods extremes. So that's kind of like the nuance. And now it's a very balanced market here. And in the overnight, always look into, you know, kind of look into trading maybe the Asians after the Asian session is open, unless Trump or any kind of important fundamental news comes out. But the volatility doesn't really pick up until the Asian sessions are open, which they are now, and we've got a very balanced market where nothing's happening. I think uh, there won't be much movement or volatility unless we get to this extreme, or unless we get to this extreme, to be honest with you. In the middle, you don't want to, like they say, don't fiddle with the middle. In the middle, I don't think there's much of an edge to trade here. And also, if once Europe opens, which is around 4 a.m., 5 a.m. here in Eastern Zone, that's when, you know, you can get some decent volatilities, and that's when I like to trade the overnight sessions if I do wake up early, and that's where, you know, things could get a bit more interesting. This is the NQ, so I just wanted to show you guys that quickly before I end the session here. The way I trade, I have my profile, I have a 30-minute footprint of what's going on. So this is basically every candle here is a 30-minute footprint, and I've got the volume profile on one side. Clearly, in this overnight, this just going to show it here. Yeah, clearly this low volume node has been holding. So, you know, a good trick is to rely on low volume nodes. If we're going up, you want buyers to be defending these low volume nodes. Okay. Let's just look at that quickly. Yeah, so the market, the 6 p.m. market opened here, came into this low volume node, held it 1, 2, 3, 4 times, and, you know, if we look at it that way, we you have a better understanding of how to incorporate. You know, this low volume node could be an area if sellers show up. Other than that, you know, we have some areas that could be of importance when it comes to volume profile, and, you know, that's pretty much it. So I have a 30-minute footprint, the market profile, and then I use just this quick visual way of having, you know, a 20-second, I believe it's a 20-second, yeah, a 20-second chart where don't really pay attention to these by demand and supply zones, although you can use demand and supply, how you call it, analysis with candles. And I just want to know, okay, when we get to that level, are sellers, you know, are they respecting that? And also the fact that an old supply, which is here, I'm not sure which that date that is. It's probably 11th of June, and this is 3rd of June. You know, buyers had traded above this and were not able to hold above this zone back then. So kind of like another new zone or a target where the market might want to come back and rotate back into that. Again, very clear here. We're going up by respecting these low volume nodes. You know, there are trade setups that I have that I look at. If we have a market that's going, making higher highs and all that, I'm not willing to basically short this market unless we really get into a zone that I'm looking at. That could be a low volume node or any kind of a market profile nuanced zone. Um, and if the market, yes, you could short a market that is making higher highs, because higher highs and higher lower lows, it's just basically a chart pattern, right? It's not, it's price action. It's not something derived from order flow or from the tape. But you see here, Just quickly, if you look at it on a, you know, low here, a low here, and then a low here with, I don't know if you guys are able to see this, but we made a low there with like lower volume. We're going down with lower volume. So most likely if we get a trap here, and if you see that in the footprint or in the dome, you're able to take advantages of these. It could be a short-term scalp, you know. What I like about that is that when it goes up and comes back and retests a low volume node, that's a big buy, and that could have been what, 3083 to 3087, 3 to 4 point scalps. These are little, you know, trade setups that I look at when I trade. But I mean, market profile gives you the context, the structure of what's going on. It's giving you areas to lean on to either buy or to sell. Uh, Again, I would not really want to be a seller unless we're below this area, and it has to really be decent aggressive selling. You know, some traders will scalp here and there and just based off the tape, but I mean, if you have good analysis, and here, like, even if we're getting like selling, let's say, now we're getting some sweeps, we're getting some buying, but there's no one really in control in this overnight because it's a very balanced session, especially being in the middle of a range of this M period. Again, that just clearly tells me that don't initiate anything. There's nothing to do here. Sometimes it's also a question of velocity. I'm going over a lot of things here, but velocity is basically, look, we've got 25 to 9 in the NQ. Okay, I don't have the power meters for ES here. Maybe I should put them on. Just going to show it to you guys here. So this is the power meter for the ES. Um, you know, it's decent. Decent volume means that there's good velocity, you know. 4, 7, 12, 10, you see, there's not a lot of volume in this. You want velocity to pick up, especially if you're trading NQ. You don't want to be fiddling around with 4 or 5 contracts here. You want some decent volume on the on the sorry, I'm looking for my words here, on the depth of the market here. You want the liquidity to be there. Again, this liquidity that you're seeing here is not going to be the same as the regular NQ contract because this is the micros that I have here. And I think as a trader, if you're getting used to trading the micros, and look at the tape here, we're getting good selling here, but prices are not getting, you know, the selling is occurring, but sellers are not able to take control. So this is ES. So I mean, it's just the fact that sometimes the tape will give you decent selling. You've got selling in the tape, but nothing is occurring. Really, like sellers now, they finally got, you see, 5 to 20 here, 38. You know, they're just getting slightly more aggressive, but the velocity isn't there, especially in NQ. You want decent volume to come in, and you know, 2, 1, 3, compare this. The footprint is not giving you any edge here. You're not able to really get a good feel of who's in control because the market is balanced. You know, it's a balanced market. When it's a balanced market like this, it's tough. You can do 2, 3 tick scalps or whatever, but you know, that's a lot of energy consuming. Uh, you know, unless we get to this low volume node and you know sellers really do pick up, then I'll have some targets, you know, 74 to 70 here, or like I said, it could be a target nuance just off the market profile. Other than that, that's pretty much how I could resume what I look for during the day. And obviously the market profile structure, the footprint, also the dome with jigsaw here is the main you know, game changer for me. If you guys have any questions, don't hesitate to contact me. Obviously, markets are risky. Always, you know, put your stops in. Make sure you understand what you're trading, and maybe, like I said, if you guys want to get used to the market profile, the volume profile, and all this with the dome and jigsaw, um, give yourself some time. I mean, 1 to 3 months just to understand what you're looking at and to really digest the information. The theory is there in the books. You can go read the books about market profile and volume profile, but it's not going to be enough. You guys really need to see the markets live. You need to have live data. You need to have real data, and to really visually have. The way I learned this is I recorded a lot of sessions. I went back to sessions. I went back to, uh, you know, days where I sim traded, or I looked at why didn't it work, what was going on. I would record my sessions and go back into my recordings and see what I missed and what should I have, how should I trade those days. These are little nuances that you really need to take time to understand and apply to your market profile and volume profile understanding. Here are my contacts. I do give private one-to-one sessions with some traders. Just send me an email and or message me in Twitter, and we'll discuss all that. I will basically support, share, and try to really share my passion when it comes to trading. This is what I like. The markets are what I breathe every day, and hopefully I was able to give you some guidance and some kind of information when it comes to market profile and volume profile and the way I trade. If ever you guys need anything, don't hesitate to contact me, and also don't forget to maybe subscribe and follow me on social media. Enjoy your night, and we'll keep in touch.